Okay, awesome. So, hi, Joe.
Hey, Holland, how's it going?
It's going great. The reason I'm so glad that you brought up doing a Zoom because right now we all know that, well, most of us know that these interest rates are giving us some, anxiety, especially buyers. We are seeing prices come down a little bit or homes sit on the market longer. In that case, buyers have a little bit more pull when it comes to asking for a lower price. But there's other options too, and not everyone gets these options. So that's something I wanted to start off with. The program we're going to talk about today, I'm not seeing like all the lenders that I follow or even all the realtors that I follow talk about this program. So why is that? Is this something that not everyone has access to?
No, I mean, this program's actually been around for a while. I mean, these buy downs have been present in mortgage for, the better part of a decade. So these aren't anything that are new, but definitely something that is beneficial in today's market, especially with where rates are. We all know at some point rates will come down off of these highs. We've been in a decades long trend as far as rates go, downtrend. So we've been in a downtrend for decades within regards to interest rates. So they're going to end up going back down at some point. So this gives the buyers right now a great opportunity to have a lower rate for that first year or that second year while we wait for the market to adjust and normalize back to a lower interest rates. So this is a great opportunity, like you said. We are now entering a normal market where seller concessions are going to be present again. Prices are going to come down. There's not going to be 20 different offers on a house.
No.
That it was bonkers. It wasn't even normal. So we're getting
Yeah.
back to a normal market.
Okay, so the program we're talking about today is the buy down program, meaning a buyer can buy down their rate with a seller concession. Is this a program that is always available, but it's not really promoted when we're in a down market? Or is this like something that comes and goes? Because
It,
for people that are like, okay, like I do want to buy and I'm not buying right now because of the market, but just because I don't have money saved, so is this program going to be available in, a year or 2 years when I'm ready to buy? What about that?
Yeah, I mean, it's always something that's there. It's always available.
Okay.
Lenders do, come in and out of the market with particular products, right?
Yeah.
So typically, everybody will follow suit once one person, comes out with it. So in this case, once we saw rates start to go up, one particular lender came out with the 2-1, and then others followed. So I feel like as we move forward into this year, into next year, if the rates do come back down, these will still be available for buyers for the foreseeable future.
So I'm not seeing a lot of lenders like talk about this. So again, is this something that any lender can, I mean, because it's just using a seller creditor, or in some cases, a buyer can even pay it down. So why am I not seeing people talk about this? Because I think that this is brilliant, especially right now. Like I want every buyer to know about it, which is why I'm talking to you today. I'm like, if we can get a seller concession, you can get 2-3% off your freaking rate. And with rates being 7 right now, like I just think it's incredible. I don't know. I just think it's really great.
Yeah, I mean, I can't speak for other people and what they promote
But
out there.
anyone can do it.
Anybody can
It's
do it.
it's not
Yeah.
like a lender thing. It's just a
Yeah,
thing.
it's not specific just to,
Wow. Okay.
modern lending.
Yeah.
Anybody out there in this market can do it right now. It's just actually understanding, how to do it, and what you need to accomplish on the, negotiation side as the, buyer's agent in order to get them this program. And as I, go through the slides and show you how it works, get into the nuts and bolts of it, you're going to see that this is way more beneficial than the old school way of paying points to buy down a rate. So
Yeah, so we
yeah.
have a question. Someone said, "Hi, with a buy down program, won't it adjust after 2 years and then that the be more stress on the homeowner that the prior 2 years? I would hope that the buyers don't find themselves underwater." What would you
No,
say to that?
because with this program, the buyer has to qualify at the high rate, right? So they are qualifying for the loan at 7.25%. That's today's rate, right? 7.25%. That's what they're qualifying at. So they have to, meet those debt to income ratio guidelines at that higher interest rate. So they're not getting a payment shock on that third year. They've already qualified for that payment.
Right. And then, okay, so let's say by the time that they don't have this discount anymore, whether it's the 2 or the 1 or the 3-2-1, by the time that the year hits, that it goes back to the original rate, it's the original rate as of when they first got the loan, right?
Correct.
Okay, no matter what the rate is 3 years from now, but they can refi
Yes, and we'll get into
if the rate
yeah.
is better than it was when they originally signed up. But if it's not, then
They're locked in. It's a
then
this
they're
is
locked in at
this is a
7%, but
30 this is
maybe
a
it's
30
12.
year fixed. It's a 30-year fixed loan.
Okay.
So if rates over the next 2 years while they're in it go to 10%, they have a 30-year fixed at 7.25. So yeah, that they, like I said, they have to qualify at that higher rate. So it's not a teaser. It's not something that they're going to have payment shock with at that beginning of the third year.
Okay. Any applicable fees for the buy down program? So let's first talk about that, because I don't know if this question, if the person knows that yes, there is a fee to get the buy down, and it's either paid by the buyer or by the seller, and in some cases not even allowed to be paid by the buyer.
Correct.
So when we are writing an offer using this program, we can either write whatever type of offer you want and ask for this credit. Or in some cases, what I just did with a buyer, the seller didn't want under asking. So we wrote, I think the credit needed to be like $7,000. So we made sure that it was going to comp, wrote $7,000 over asking, and then asked for the credit. Now the seller is paying for the credit but not losing any money themselves.
Right.
Losing any money.
Right. It's just like stacking the offer with seller credits, like how we've done that before with recurring and non-recurring closing costs. So yeah, let me share my screen and jump into this PowerPoint that I put together just to kind of give you guys a better idea of like how this works and get the nuts and bolts of it. So let me
I hope I'm
do
not
my,
like shaking.
oh,
And for everyone on the live, this is Joe DeQuino. He is a lender with Modern Lending. And today we're talking about, so I do want to talk about both. I mean, they're both the same, but the 3-2-1 and the 2-1, because I see a lot more marketing for the 2-1 than the 3-2-1. So I want to cover both. But also this is being recorded on Zoom, and I will share it after, but I also wanted to go live for everyone today. So if you're interested in the recording of the Zoom for the whole thing, just send me a message and I'll make sure to get that over to you.
so I can't share my screen, but I'll just go ahead and like
Do I need
go.
to give you access?
Yeah.
Okay, how do I? Oh,
I
keep going. Nothing's popping up for me.
all good. It's all good. So this would be really easy to explain, even without sharing the screen. So the 2-1 buy down, it's available on conventional FHA and VA loans. So you can do it on any one of them. For this particular example, we're going to use a conventional loan. So it's a 30-year fixed. We're not, this isn't an adjustable loan. This isn't, your old 228s or anything like that. This is a 30-year fixed loan. In year one, you're going to have a rate that is 2% below the current market. In year two, you're going to have a rate that is 1% below the current market. So, for example, today's 30-year fixed rate is 7.25%. So, for year one, this is from your first payment to your 12th payment on your loan, your rate's going to be 5.25%. Year two, 6.25%. And years 3 through 30, 7.25%, assuming you don't refinance. With a $500,000 loan amount at 7.25%, you're looking at a monthly payment of $34.1088. That's the principal and interest. That doesn't include your tax and insurance. So $34.1088. With your 2-1 buy down. Now, so this is where the nuts and bolts get to it. So with a 5.25% rate, the payment is $27.6102. So that's a monthly subsidy of $649.86. So for those first 12 months, you're going to need $7,798.32 of subsidy for that 5.25% rate. In year two, you have 6.25%, which is a payment of $3,078.59. That's a total subsidy of $39,87.48. So the total seller credit to get the 2-1 buy down for years 1 and 2 would be $11,785.80.
That's
Now,
on us. What purchase
that's
price?
on a $500,000 loan at
Okay.
7.25. So if you here's the cool thing about this. Now, if you refinance in, say, 14 months after the loan funds, right? Rates have dropped into the fours, and you're like, hey, well, I got 7.25. Like, I might as well just refinance now and get that locked in lower. If you refinance before that second year is up, whatever subsidy that hasn't been used gets applied to your principal as a principal reduction on your payoff. So you're using that seller credit to pay down your loan, which is
Oh.
awesome, right? I mean, that's way better than paying, a point to get a lower rate, right? You get to actually use this money towards your principal. It's a huge, huge benefit to doing the 2-1 buy down
Yeah,
because
so that's what I
you're
was
able to
gonna
pay your
say.
loan off.
So you can refi before the 3 years is up, or the 2 years,
Oh,
basically.
absolutely. You can refi, after 6 payments are made. If the rates are low,
Okay.
if the rates go down, you could refi after 6 payments are made, and whatever subsidy is not used would get applied to your principal.
Okay, that's great. So is the reason that the 2-1 is marketed or promoted, or I'm just seeing it more versus the 3-2-1, is it just because with the 3-2-1 the credit is going to be higher and therefore it's just maybe harder to get?
Yeah, yeah. I mean, you're gonna be looking at a significantly higher subsidy amount for a 3-2-1. Not saying that it's not possible. Every
It's just more
situation
difficult
is
to
different,
maybe
but yeah,
ask for.
correct.
How is that fee, that credit, how is that calculated? Is that a straight calculation? Does that change based off of where rates are? How is that when we say, okay, this is the credit we need to ask for in order to get the 2-1 buy down, is that calculation always the same?
Yeah, I mean, it's obviously dependent on interest rates. So if you have a situation where, say, we're talking about a 2-1 buy down at the middle of last week versus today, you're looking at a significantly different cost because the rates have increased. Uh, so,
Oh, we're
basically
breaking
what
up a
you're
little.
doing is you're taking that fully that 7.25% rate, that payment, which is 34 at the lower buy down rate, and then you're that's how you're getting your subsidies.
Okay.
Sorry, is that me?
No, that's okay. Yeah, you were
Better?
breaking up a little bit, but I think we got you. Um, oh, sorry.
I'm on Wi-Fi, so it may be
It's okay.
spotty. Yeah, and so yeah, it's all gonna really depend on the market. So it's just good to obviously check on that. If you have an offer and you've been negotiating for a little while, sometimes that subsidy could change.
Okay. And so next I wanted to ask, hold on, I had a question and I just lost it because my alarm went off. It's time for me to eat. Um, I had a question. I lost it. I lost it. Will come back to me. What else? What else is important about this? What else should people know? Is there a qualification for me for being able to use this loan program? Is there a criteria that they need to meet?
No, no, it's
Nope.
just I mean, standard guidelines for any conventional FHA or VA
Yeah.
loan.
I mean, they
And
have
you're
the criteria to meet the loan, but not for this specific program.
correct. Yeah, there's no specific reserve requirements or anything like that. It's simply just getting the seller to pay that subsidy, and they're able to secure that lower rate for the first year and the second year if they keep it that long. So
Yeah. Okay, cool. So it came back to me. Now I know we don't have a crystal ball. People are always asking us about the big thing right now is like the market crash or bubble or whatever and also rates. But did you guys I mean, I know that especially like modern lending in Decker, like he's so on top of checking in at like where everything is, and like you guys are so great with your data and your research and just staying on top of like what's actually happening. Did you guys see that? Did you guys see this rate, this spike come at all, or was it a complete shock?
It, you know,
Or were there any
candidly
indicators?
candidly speaking, I didn't think we would get over 7% myself personally. I didn't feel like the Fed would allow it to go that high, but I believe, now that, they're not willing to step in and intervene at this point. They are holding strong to their promise of no quantitative easing. They are not purchasing any mortgage-backed securities right now. So when you take that huge buyer out of the MBS market, there's and they're holding firm because it's all about their credibility. And they don't they need to continue hiking and reducing their balance sheet, in order to fight the inflation. And I didn't really think it would get this high. Can it go higher? I think so.
Yeah, that was
But
kind of my
at the end of the
piggyback
day,
question is where I mean, I know nothing about lending. Every time I have a buyer, I'm like, ask the lender when it comes to anything on like the financial side, the all of that, because I never want to give misinformation. And sometimes even when you speak to me, I'm like, whoa, let's dumb it down for Holland. I feel like you're speaking another language. But you guys, I mean, or you personally, what I mean, do you think it's gonna hit 8 by the end of the year? Or is it hard to say?
I mean, I wish I had that crystal ball.
Yeah.
I don't know. Is it possible? I think that level before coming back down. So that definitely, and nothing surprises me anymore.
Yeah.
This market has just been crazy. But at the end of the day, if you look at it, it's still cheaper to do it at these rates than renting, right now. So we're still seeing obviously people buying homes. So
Yeah.
it's not stopping people from purchasing. And even though you are having this conversation with somebody and you're saying, hey, your rate's going to be 6.875 or 7.25, they're not batting an eye. It's simple shelter. They just want a home, and
Yeah. No,
as long
absolutely.
as they qualify for the payment, you're
Right.
not doing
Yeah. At the
anything
end of the
that's like
day,
exotic or crazy.
yeah. No, at the end of the day, 100%, it's just like when we're selling a house, right? Like it doesn't matter what we're selling it for as long as you're netting what you need or want to net. Um, and so yeah, same thing with that. As long as you're comfortable with the payment and you can find a home in that price range with that payment that you love and that you can see yourself living in, then that's really all that matters. I think that though buyers just have that like shock when they were seeing or hearing their family members last year and the year before buy these homes, but they didn't know that their family member paid $50,000 over appraised value. They just know that their family member bought a home at 3.25% rate.
Yeah.
So but that's why I really want to talk about this program, because it was just, I think that it's, if you can get the credit from the seller, it's, why would you not do it? Why not take advantage of this? Especially now.
No brainer.
Yeah,
Yeah.
no brainer. No brainer. Well, is there anything else that you want to say about this or anything? I mean, we should definitely do this more often. Talk about different things that you guys do to help buyers. But is there anything else you want to say on this topic?
No, I just, if there's any further questions about it, if it still seems kind of confusing, just reach out and let us know, because some of these newer things they do sometimes, you know when you talk to a crowd you'll see glazed over eyes, but it really is simple. And just keep in mind that it is a fixed loan. It's a 30-year fixed loan. This isn't an adjustable, and it really will give a lot of people an opportunity to utilize that seller concession to keep their payments low until they're able to refinance. And you will be able to refinance at some point. I can't tell you exactly when,
Right.
but they will be able to get into a lower rate.
Yeah, for sure. For sure. Well, whatever slides that you had wanted to share, if you want to email me those or even take a picture of them on your phone, I can connect, I'll edit them to our Zoom video so that some people just still like to see that visual representation. So next time I'll
Yeah.
let you start the Zoom so you can share your screen. I don't know what happened. I'm sorry about that.
Oh, no worries, no worries. Yeah, I'll email it over to you, and if anybody wants a copy of that, just reach out to Holland for it. And yeah, if you have any questions or need any further explanation about it, let her know, and we can get put in touch.
Perfect. Well, I'll be in touch. Thank you so much for hopping on today, and we should do this again soon with another topic.
Definitely, my pleasure. And everybody have a great rest of the day, and try to stay cool.
All right. Thanks, Joe.
All right, bye.
Bye. Okay. Thank you so much. That was good. Yeah, if you want to
Great.
send me those slides, I'll edit it together with this, and then I'll hit you back up, or if there's ever anything that like you think that we should like really share, I should
Yeah, I mean, if
try
you
to do
come
more
up
of
with
this
the if
stuff.
you yeah, if you want to come up with some topics, I'd be happy to